Hello guys, welcome back to this channel. So let me show you how to catch an example of this trade in 30 minutes and still get good risk to reward. This is how we trade this SMC swing strategy. So start to move like that, and here we go, boom, that is take profit smashed. So let me show you how you can get this kind of trades, which are always taking place between either a swing of 4 to 3 or 1 to 2 days, or just an intraday trade. So how did I come to this trade? These are the checklists that I used to arrive in this trade. So like another example of this kind one took place today, shown in this Telegram group here, with the same strategy and a detailed explanation. If you want, you can join. The link is in the description. You can see same strategy, nothing else has changed, the same checklist, and TP smashed. So the average risk to reward here is 1 to 6, but we are just looking for 1 to 4. Anything 1 to 4 is okay. So you can either widen your stop loss or tighten it to get a better entry. Like this, you can see played 1 to 7, and today's one played at least 1 to 7 too. So that is the average risk to, but you can still hold more. You can still hold more. This went 1 to 3, but you can still hold more. It's only that it will take more time if you want to swing it. But 1 to 6 is just enough. Actually 1 to 3 is perfect. 1 to 2 is good. 1 to 3 is perfect. 1 to 4 is amazing. So in this case, you can just target 1 to the high. So as indicated here, that the TP is above or below. Like in this case, we are going buying, so it is above previous high or low of the daily. In this case, we are dealing with high since we are buying. So this is the daily high. That is our target. So it is usually hit the same day or the previous day. So that is how it is. So at 1 to 3 we break even. That is the trade management. Risk management is that at 1 to 3 we break even, or we reduce our loss to somewhere there, not exactly at BE. I don't like placing my TPs at BE because these trades come flash on your entry point. If you got it at the right place where the bank also entered their orders, most likely you are going to be swapped out, and then the market moves in your direction, as you can see, aggressively like this. So these moves are usually good for if you want to scale in multiple positions. It is always good. Like in this case, this one was also a nice one for scaling position. So you just add positions as time goes by until your take profit is hit. The same principle applied. Same to this. So let's go to how it played out and start everything from scratch. So let me click bar replay and then go to daily time frame. So let's delete everything and start afresh. So let's start afresh. So what happened here? This is the trading day. So trending daily time frame direction closes in the opposite. So as you can see, this market is buying. So this day it closed opposite. It means the following day we were having trade. So we wait for the second day after the market has closed the following day. So we wait for the following day. If you want a detailed explanation of how SMC work, check my previously uploaded videos. I will explain to you why this happened. But basically it's a 4 hours pullback after this break of structure. This was IDM taken. This is first break of structure, and then we have a small pullback here and then a push upwards. So this is the IDM taken, tapped on this demand zone order block somewhere here. So I'm expecting the market to reverse, and this should be my take profit. So basically take profit is the daily's high. So let's mark the day. This is the high, this is the low, so we're expecting this to be taken. So we go to 4 hours. So we wait for the first, what is the next criteria? First 4 hours aligning confirmed. So we have to wait and see if first 4 hours has aligned. So that's the first 4 hours completed. No alignment, actually took the low. Alignment is taking the upper side because it should be aligning on the daily direction, which is buy. Again, this candle, next candle, this one now aligns. So taking this high was the confirmed alignment. Sometimes it can always be within an inside bar. Both of them are still alignment, there's no problem. So that is the alignment we are waiting for. So that is the alignment we are waiting for. So this is the daily high, which is our target, and this is the daily low, which is the pullback in 4 hours. So we save ourselves stress of looking for all this by just focusing on taking high probability trade. The only day where the market takes IDM, like in this case it also took IDM, but there is also high probability that it would have just kept pushing down. But since we are looking for the highest probable trade, the other highest probable trade was here. Again, as you can see here, my network is misbehaving a little bit, so just bear with me as I fix it. So if you go to daily time frame somewhere here, you're going to see that market closed on a bearish side. I'm not sure if it is here or it is here. Market closed on a bearish side, and then this one is the first alignment. So after this alignment, this was our take profit. You can see smashed. Even if it was this one, I'm not sure. This is where the market aligned when it took the high of this. So immediately it never gave pullback. So that is why we use 30 minutes to get entries, and TP was smashed. If you want me to do this too, comment in the section and say do analysis for the blue zone, backtest the blue zone, and then I'll backtest that. So let's continue with this. Now market has already aligned, so 4 hours has already aligned. The first 4 hours, we're dealing with the first one, not the second. First 4 hours aligned, confirmed. Then again, now we go to 30 minutes and then we wait for the first 30 minutes V-shaped aggressive manipulation. So we will wait for manipulation. Manipulation is just pullback in 4 hours, but in 30 minutes is manipulation because it's very aggressive downward, pulling here. It can even pull to down here, we don't mind. The most important thing is that the market has aligned. It's only that it will reduce the probability of this trade playing successfully. We don't need it to pull back until taking the least we should expect is to see this low being taken. There's no problem. These are just build up of liquidity, so we don't mind if 30 minutes pullback takes this. There's no problem, but this is just making it low probability that it will keep tanking down. So I'm going to even show you from today's trade one that maybe played at a break even, because not all strategy are powerful, especially are a holy grail, especially when there is news. Today there is news. I think Powell should be talking, so that is why the market misbehaved today. So today is 30th. Powell should be talking. That is why the market is a little bit toppy in this side, yet it was the best entry. So let's go to 30 minutes. So let's see 30 minutes. So as you can see, another thing, there are small other rules that is not indicated here. I just know them off head. It is low probability. It is high probability if the first few candles of 4 hours takes the high of the candle one that aligned. That makes it very, very high probability. So in this case, if we see that being taken, that means it is high probability. Now we will just be waiting for a manipulation. Otherwise, if it is not taken, then there's no problem. We can wait, but the correct trade is when again it pulls back to cause second break or second alignment. So let's see. Now it has taken the high of the previous candle. It means now the market is taking highs of the previous candles and aligning its shape, is taking shape. So let's wait for manipulation. some aggressive move downward. So just patiently waiting. Also it has started closing downwards, so you can see that is a bullish one, and then it closes down, which is okay. That is a rejection. If it closed bullish heavily here, we'll just take a buy, because there will be no manipulation, because this would be the break and then the pullback, and then now we are continuing. So we would have just taken it, an entry somewhere here, stop loss down here, and we push down. So this is good sign. So let's wait. Now that is the best sign, especially when it comes with the wicking. So that is where we want to see manipulation and wicks. Just add that one. It's always good to see the wicks showing up, and wicks, it's always very good and high probability to see the wicks. So when we see that wick, it means that if you check on 15 minutes, there was a very good manipulation there. So that downward move, it's always a very aggressive, but in this case it's not a must. At the same time, we are having 15 minutes cob, which is here. So entry on 30 minutes full body closure and 15 minutes cob. So let me fix that internet. So already we've seen the first body close of SCOB. SCOB has already closed in 15 minutes, because we've now seen the first 30 minutes V-shaped aggressive manipulation, although it's not aggressive, but at least it is manipulation. This is the manipulation. So what is important is this wick that we are seeing here. This wick is always an added advantage. So we just stick to 30 minutes. It means that the rejection is over and the pullback is equally over, so we can take our positions. So that is where we get our entry. This is full body closure. Alternatively, you can even wait for the second one, but you just be killing your risk to reward. So entry was in 30 minutes full body closure and 15 minutes scope. That one has already happened, so we can see wicks and full body closure. It's okay to take the trade. If the analysis is correct, it will play out. If it is not correct, then it will be manipulated anyway, so there's no problem. That brings it to around 126. So where do we place our SL? Few pips above or below the above 30 minutes candle. So this candle, you place few pips below it. You can have a tightest one, but it can easily be liquidated, so we can make it 12. So 1 pips below, or even 1.5 pips below, because we still have enough room for TP. TP is above high or below previous high or low of the daily direction. The daily direction is buy, so we are going with above the previous days. So that is where it is. And then since we still have enough room for 1 to 4, because risk management dictates that we need to target at least a 1 to 4 risk to reward, and then set our BE at 1 to 3. So you can even increase your stop loss, it is still fine, or you can just have it tight if you trust the analysis, like in this case. And then now you walk out of the chart and then you wait. So you can see that was a very heavy pullback, and then now a TP was hit. How long did it take? How long did it take to hit TP? So it took exactly 6 hours to hit TP. So you just leave it on 30 minutes, you don't watch it another time frame. So this was 1 to 3 already was somewhere here. 1 to 3 was somewhere here. So stop loss somewhere here. You don't just place it here, you will be liquidated, and the trade will go in your direction. So what you do, just place it below here, just lower your risk to somewhere there, and then you leave the market to play. Now again, I want to bring to your attention that this move is what we needed. Now this second move is always pullback in 4 hours, or the Judas swing for the intra session. So just be observing if the market has already aligned upward, and then you can get a re-entry. So like in this case, if you just watch wicks candle by candle, you will see that the market pushed down somewhere here. This was the low, and then it aligned when the wicks of this candle took this other wick, and then now it pulled down. So if this was taken, this was a good opportunity for re-entry. So let me just remove this. If you know valid pullback, you can see that this was a valid pullback, so market aligned at somewhere here. That is what is called 30 minutes alignment. But the highest entry should be when this high is broken, you can enter. But since it's so large and upward, if it was this pullback and this break, then this break was the most ideal, so you enter upon this break, stop loss here for another second entry. But this is just low probability, but still possible. So you can, this was the candle that took it high, so you can wait and enter immediately it closes, then stop loss just below here. So either you are wicked out of spreads, or if you had a reasonable stop loss, you should have gotten some 1 to 3, at least a 1 to 3. So that is how the trade played out, and Smash take profit for a 1 to 3 and a possible scale in. Now the same trade was expected today, but it didn't play out. Possibly a BE, or depends. Like in this my case, if I took it today, it would have been a stop loss because I only BE at 1 to 3. So let me just show you what happened. So let me show you what happened today, so that you know that not all strategies are holy grails. Not all, there's no holy grail strategy. So this is where the market is. So let me go back to the daily time frame. So on the daily time frame, now the reason why I didn't take this is because the market has started ranging, and I have a rule that if the market starts ranging, we should be avoiding this market. And especially now that I started ranging, that is why I wasn't actively looking for trades. So you can see there was this candle here. This is the candle that closed on the downward side in a bullish market. So trending daily time frame direction close opposite in one day. So this is a trending market, and then we have an opposite close. So this is opposite close. So we go to the second day and we wait for the first 4 hours alignment. So where did the first 4 hours alignment take place? The first 4 hours alignment, so this was the daily high. So let me use my bar replay. So this is how the market closed last week on Friday. So we wait for the first alignment. So the first one does not align. In most occasions, USD pairs sessions that run on London and New York, they always align in the second candle after the day has opened in most occasions. So that was the first alignment. So you have the ability to just take it from that point and target above, because it's so small. The stop loss I think is so small. Stop loss above here, target 1 to 4, sorry. So that would be big. You don't take it like that, you just go to 30 minutes and wait for the manipulation and the wickings. So like I said, it's high probability. It's high probability when the market takes the high of the previous candle, it makes it very high probability. So you just have to wait and see. So let's see, takes the high, makes it high probability. Now let's wait for manipulation. No manipulation yet. Now that is manipulation. This aggressive move, that is what makes it manipulation. So next one we are waiting for we've seen first 30 minutes V-shape aggressive manipulation. As you can see, that was very much aggressive. It can scare. The first one. This is now the manipulation that we wait for, and then now high probability has already happened, so we are just waiting for entry. So this is the entry, so we are waiting for entry. So enter 30 minutes full body closure and 15 minutes scope. So no full body closure. We must see full body closure in 30 minutes, and within that 30 minutes we must see a scope in 15 minutes. So let's wait. So this kind of madness is what made me not to focus even much in this trade. I just knew because of this news here that is yet to take place. So this kind of madness is not nice. So let's just keep waiting. Then we see this full body closure. So ideally this thing should not be big like this. If it is big like this, then the juicy part of it is missed. Ideally it should have been somewhere here, somewhere down here. It would be nice, like the one I just showed you, the very tight stop loss of 9 pips for GU. That is very okay. But if it can even give us less, I like less, let's say 7 pips in GU would have been very nice. Then we target this for a 1 to 6. That would have been very nice. So by this time we would have been hitting 1 to 3 easily. But in this case the market is saying that we need to take it from this with this stop loss. I am not into business of being mad, so discretion comes in, that if it came down here. So these are the kind of trades you just ignore, but the same principle is applying. So eventually it pushed upwards, so it pushed upward. So this should have been at least a 1 to 3 somewhere here, so that by the time it's pulling back you're already at break even. So 1 to 3. So you see it should have been giving you 1 to 3, which is nice, but at this particular point it needed me to be at 1 to 1. I don't work like that. That is why I never paid a lot of attention to it, because this is what I was expecting. So at this particular point I would be trailing my stop loss. Or just at BE and wait. So eventually it never took the high. So my internet again is misbehaving when I'm just about to finish up this trade. So just bear with me as I finish it up, so that you can see how the market played and how discretion comes in. Even if you have trading rules, you must have discretion, so that you avoid taking losses. This was so big and abnormal. As much as everything played out well, it's only that the entry part was a little bit discretionary. So that was it started pulling back. So you see this movement here should have completed this trade. So this movement should have completed this trade, but unfortunately it has come back to stop people at break even or even at a loss, and then immediately took a loss. Since the market sentiment and direction is on the buy side, it has now moved upward in that manner, and currently that is the position of the market at the moment. So the same trade played well, but in Euro USD, as you can see, it's only that it is ranging. That is why I didn't take this one today, but it played successfully. But on GBP USD, which it was supposed to play perfectly, it was having entry issues. So because of entry issues, this should have been a break-even trade or a no trade at all, or even a stop loss. It depends.